Good morning, traders. This is Evelyn from Astra Montis, and I'm here to bring you the latest insights for the week of August 26th to August 30th, 2024. Let's dive into what to expect in the upcoming week. This week unfolds amidst a flurry of economic updates that could reshape global financial landscapes, with anticipation building for the Federal Reserve's potential rate cut at the September FOMC meeting. All eyes are on Friday's PCE inflation report to gauge the Fed's next moves. In the Eurozone, the upcoming CPI estimate could influence the European Central Bank's easing strategy, while Japan's Tokyo CPI data is expected to signal future Bank of Japan policy shifts. As markets anticipate the first U.S. rate cut in this cycle at the September 17th to 18th FOMC meeting, attention turns to Friday's personal income and outlays report, particularly the PCE inflation data, with the core PCE price index expected to remain steady at 2.6% in July. Any upside surprise could challenge the Fed's dovish outlook, particularly as hawkish members see lingering inflation risks. The Fed's rate path remains uncertain, with further cuts contingent on softer-than-expected inflation figures, making this report critical for market expectations. The euro has rallied above $1.11 against the US dollar this month, even amid expectations of another ECB rate cut in September. However, the upcoming flash CPI estimate for August could be pivotal in determining whether the ECB proceeds with further easing. Forecasts suggest headline inflation may dip to 2.3% from 2.6% in July, edging closer to the ECB's 2% target, while the core rate is expected to ease slightly to 2.8%. This data will be crucial in shaping the ECB's decision-making at the next meeting. The yen's recent strength has been partly driven by expectations that Japan's era of ultra-loose monetary policy is nearing its end. The Bank of Japan's July rate hike and reduced asset purchases have spurred speculation of a third rate increase by year-end. Governor Ueda has signaled that more hikes could follow if economic conditions and inflation remain steady, despite market volatility. The upcoming Tokyo CPI data, seen as a leading indicator for national figures, will be crucial in guiding the BOJ's next move. Inflation remains the focal point in Australia, with Wednesday's monthly CPI print set to reveal whether price pressures have eased further. The Reserve Bank of Australia (RBA) is keen to see inflation continue its downward trend from June's 3.8% rate before considering a shift from its hawkish stance. Without fresh progress in July, the RBA is likely to maintain its current policy, which could bolster the Australian dollar. However, weaker than expected Q2 construction and capital expenditure data might pose risks to the currency's recent gains. This week has been marked by significant economic events across major global economies, setting the stage for potential shifts in monetary policy. From the crucial US PCE inflation report to the Eurozone's flash CPI and Japan's Tokyo inflation data, each release could impact central bank decisions and market expectations. Australia's inflation data will also be a critical factor in shaping the Reserve Bank's future actions. As we continue to track these developments, their implications for global currencies, equities, and overall economic stability will be closely monitored. Stay tuned for further updates as we navigate these evolving economic landscapes. To conclude, as we navigate through this week's trading landscape, it's essential to closely monitor these significant updates. We appreciate your confidence in our insights and wish you prosperous trading in the days ahead.